environment where rates and yields remain under pressure globally, income-oriented strategies such as the Manulife Global Multi-Asset Diversified Income Fund could become more relevant to investors into 2020. We believe the fund provides investors with an opportunity to gain exposure to some of the known traditional asset classes and non-traditional, globally diversified income sources. The fund has exposures to high income-generating assets which drive the monthly distribution yield for our investors, with the fund aiming to primarily generate a high income whilst also aiming to provide a stable NAV. So the outlook for the fund into 2020 remains modestly positive in terms of where we are in the investment cycle. High income generating asset classes should remain well bid over the next 3 to 5 years. Key exposures for the fund include US high yield and US dollar emerging markets credits, which we believe have a reasonably positive outlook into 2020. Defaults remain well below long-term averages, a trend we expect to continue. Against a challenging backdrop for global investors given negative yields, the emerging market credit universe, in particular Asia, has modest credit risk premiums which reflect a high-quality region. A favourable technical backdrop also continues to support the asset class. In terms of asset allocation shifts into 2020, we must be mindful that allocating away from the fund's high-yield sources in fixed income towards a higher equity exposure would sacrifice yield and add equity risk to the portfolio. So geopolitics will remain a key concern given their impact on credit spreads, equity risk premiums, implied volatility and liquidity. We believe we've seen a cyclical improvement more recently in the geopolitical environment given central bank easing, a lower probability of a no-deal Brexit, and signs of a partial Phase 1 trade deal. Nevertheless, global growth and earnings remain under pressure for the foreseeable 12 months, yet we believe opportunities will still be available across asset markets into 2020.